The RBA has lifted the cash rate by 25 points. Let's have a look. Good afternoon, everyone. Florian here, and welcome to another episode of HeiseSays. Grab your stein of coffee, and I hope you're having a good Melbourne Cup day. The RBA has lifted rates. It's up 25 points. So let's have a look at this. One of the advantages, I say, of not working in a big office is I don't have to do the whole bloody office sweeps and stakes and all these. It's good, guys. It's good. But our cash rate has gone up. And for those of you playing at home, we're now at 2.85%. You can see I didn't have to update this chart for quite some time, but it's rocketing up, everyone. Are we like the early 90s? Look at that. So when are they going to stop? When will they stop the climb? How high will it go? So let's have a look at the statement by our Reserve Bank Governor. And remember when they were saying rates won't go up until 2024? At its meeting today, the board decided to increase the cash rate target by 25 basis points to 2.85%. It also increased the interest rate on exchange settlement balances by 25 basis points to 2.75. As is the case in most countries, inflation in Australia is too high. Over the year to September, the CPI inflation rate was 7.3%, the highest it has been in more than 3 decades. Global factors explain much of this high inflation, but strong domestic demand relative to the ability of the economy to meet that demand is also playing a role. Returning inflation to target requires a more sustainable balance between demand and supply. So, because they're not happy with inflation, they want to slap you around so you don't go spending that money. Okay, you plebeians, we better not be naughty at Christmas time and spend too much, because then we'll get more rate hikes. Come on, we've got to do as we're told. A further increase in inflation is expected over the months ahead, with inflation now forecast to peak around 8% later this year. Inflation is then expected to decline next year due to the ongoing resolution of global supply-side problems, recent declines in some commodity prices, and slower growth in demand. So why are they raising the rates if all of these things overseas are going to decrease inflation anyway? Medium-term inflation expectations remain well anchored, and it is important that this remains the case. The bank's central forecast for CPI inflation to be around 4.75% over 2023 and a little over 3% over 2024. The Australian economy is continuing to grow solidly, and national income is being boosted by a record level of the terms of trade. Economic growth is expected to moderate over the year ahead as the global economy slows. The bounce back in spending on services runs its course, and growth in household consumption slows due to tighter financial conditions. The bank's central forecast for GDP growth has been revised down a little, with growth of around 3% expected this year and 1.5% in 2023 and 2024. So the next couple of years, they ain't going to be too good, guys. But there's not a recession. Not a recession. The labour market remains very tight. Well, isn't this what you want? You want wages to go up. Remember when that was the point or the argument? Wage growth. Many firms having difficulty hiring workers. The unemployment rate was steady at 3.5% in September, around the lowest rate in almost 50 years. Job vacancies and job ads are both at very high levels, although employment growth has slowed over recent months as spare capacity in the labour market has been absorbed. The central forecast is that the unemployment rate, is for the unemployment rate to remain around its current level over the months ahead, but to increase gradually to a little above 4% in 2024 as economic growth slows. Wages growth is continuing to pick up from the low rates of recent years, although it remains lower than in many other advanced economies. A further pickup is expected due to the tight labour market and higher inflation. Given the importance of avoiding a price-wages spiral, the board will continue to pay close attention to both the evolution of labour costs and the price-setting behaviour of firms in the period ahead. Price stability is a prerequisite for a strong economy and a sustained period of full employment. Given this, the board's priority is to return inflation to the 2 to 3 year price range over time. It is seeking to do this while keeping the economy on an even keel. The path to achieving this balance remains a narrow one and is clouded in uncertainty. One source of uncertainty is the outlook for the global economy, which has deteriorated over recent months. Another is how household spending in Australia responds to the tighter financial conditions. That's it, guys. I wonder how many people want to push and go and spend more to see interest rates go up even higher and higher. Maybe that's your path to cheaper housing, boys. Who wants to see double-digit home loans? I wonder if we'll get that point. I mean, if this peaks at 4.4%, I mean, think about it now. We're at about 7%. We're seeing some at over 7% mortgage rates. We only need to go up another 3. We need to see these about 6% to hit it up there. The board recognises, I don't know if they'd have the stamina to do that. The board recognises that monetary policy operates with a lag, and that the full effect of the increase in interest rates is yet to be felt in mortgage payments. Higher interest rates and higher inflation are putting pressure on the budget of many households. Consumer confidence has also fallen, and housing prices have been declining following the earlier large increases. Working in the other direction, people are finding jobs, gaining more hours of work and receiving higher wages. But maybe they have to. Maybe people don't have a choice. They just have to do all these things just to make ends meet. I mean, you have to. In all reality, you have to anyway to get ahead. I mean, the goal should be, for every Australian, it should be to build up multiple income streams, try and get some passive income as well, so you're not completely dependent on one sector, on one boss, on one employer. Many households have built up large financial buffers, and the savings rate remains higher than it was before the pandemic. The board has increased interest rates materially since May. This has been necessary to establish a more sustainable balance of demand and supply in the Australian economy to help return inflation to target. The board expects to increase interest rates further over the period ahead. It is closely monitoring the global economy, household spending, and wage and price-setting behaviour. The size and timing of future interest rate increases will continue to be determined by the incoming data and the board's assessment of the outlook for inflation and the labour market. The board remains resolute in its determination to return inflation to target and will do what is necessary to achieve that. Oh boy. Well, let's have a bit of a talk. I can't imagine any of you watching at all surprised that the interest rate has increased 25 points. Could have been 50. Could have been 50, guys. So we're approaching 3%. 3% used to be considered the emergency rate, or a very, the lowest you could go before you went into emergency levels. And I'm not just making that up. I'm pulling it from a report that we read ages ago into housing affordability. And I mean, they tanked it. They tanked the rate to 0.1%, and everyone FOMO'd into the housing sector. And now interest rates are just going back to normal. We've got another video I've already recorded, and I'll release it after this one, about, well, the impending cliff of people coming off their fixed-rate mortgages. And then they'll go to much higher variable rates. Now, I'm assuming that most of the people in that situation are prepared. Will it be first home buyers that FOMO'd in to super high? I don't know. Hopefully not too many, because they're gonna be really shocked. But I'm assuming that majority of that is people who are understanding that that's an insanely low rate and are just taking advantage of it. But nevertheless, the Reserve Bank are going to do what they have to do. They're going to keep increasing rates. How high do you think it will go, guys? Let me know your bets in the comments below, and if you won at the races. Take care. Have a great day. Check out my other channels, HeiseBim and HeiseSays International, for other topics I discuss. And if you're a fan and want to support us, you can financially on YouTube or Patreon, using our referral links, buying our pocket squares, or calling us if you need an architect. Take care, guys. Have a great day. And watch out for those rate hikes. It's getting up there. It's getting up there. We'll have to see how the banks respond tomorrow.